Hey everybody, Smart Silver Stacker here. Hope you had a great weekend. We are kicking off this first week of April with some very serious de-dollarization news, and it appears that this shift that we're witnessing towards a multipolar world financial system is accelerating rapidly. So the first big news story was that yesterday, OPEC announced surprise oil production cuts to the tune of 1 million barrels per day, led by the Saudis, who will be cutting 500,000 barrels. And we're going to get into the implications of this for the dollar, for gold and silver, and for inflation here in the West in just a moment. At the same time, we have got renewed calls out of Moscow for a new world reserve currency to replace the dollar, to undermine US dollar hegemony. And it really seems like this de-dollarization news, it's becoming, one, more mainstream. I mean, you are going to start hearing about this more because it's becoming kind of impossible to ignore. And also, it's happening so rapidly that it is getting hard to keep up with. But bear with me in this video because I'm going to go over a number of these de-dollarization events which have occurred in the past week or so, and we'll be talking about the implications for the precious metals, for gold and silver. Now let's talk about that because gold and silver already appear to be reacting to the global situation. Now, a lot of this price movement that we've had in the metals does have to do with the bank failures here in the US with SVB and Signature Bank and all of that. But, all of this is sort of inextricably linked, and we're going to go over some of that here in just a moment as well. But let's take a look at the chart of the precious metals for March, and we can see that gold up almost 8% in the month of March, silver up over 15%, and also very notably, gold on Friday had its highest monthly close and quarterly close on record. And we are seeing this begin to affect the physical precious metals market as well. I know we covered last week that SD Bullion, they've been experiencing delays in shipping because they've had this massive influx of orders. They've now had to implement a $500 minimum order temporarily just to help them deal with getting all of these orders out. And I spoke with them, and it's not only that they're getting a lot more orders, they are also seeing many more high value orders, $1 million, $500,000, $800,000. These orders are pouring in over there. And while this is going on, while the smart money, so to speak, seems to be moving into the physical space in a big way, we've also seen certain products like junk silver dry up completely. I mean, they're very difficult to find, and the premiums have shot way up. So clearly, people and investors, they're looking for a safe haven. They're moving into the physical precious metals market. But I just want to point out that this move into physical metal is going to pale in comparison to what we will see when de-dollarization really takes off. When Saudi Arabia prices their oil in something other than dollars, or when the dollar loses its world reserve currency status, and the effects of the profligate spending, of the manipulation by the Federal Reserve with their twiddling with interest rates, keeping them suppressed for so long, when all of that becomes apparent and the consequences become impossible to ignore, I really think that, forget about long shipping times or minimum orders. You may just not be able to get physical silver. And if you're holding physical, you may be able to just name your price. Now let's talk more about these OPEC production cuts, because this really is a huge development. This came as a total surprise out of left field. Today, at the time I'm recording this video, the price of oil is up about 7% on this news. And we haven't heard too much out of the US in terms of a response yet. We did get a quote from a National Security Council spokesperson who said, "We don't think cuts are advisable at this moment given market uncertainty, and we have made that clear." So, clearly the Saudis here and OPEC, they are disregarding the effect that this cut will have on their relations with the US. And this is very important because we've seen quite a bit of news over the past couple of days. We had the development that the Saudis will be investing in 2 major oil refineries inside of China to the tune of about 700,000 barrels per day of additional capacity in the Chinese refineries. The Saudis will be sending that oil to China, and there's a lot of speculation right now that the Chinese may not be paying in dollars for that additional 700,000 barrels of oil per day. Now, All of this is coming as the petrodollar system is sort of unraveling before our eyes. You can recall last year when the Saudis and OPEC announced 2 million barrels of production cuts despite strong U.S. pressure. There was an immediate call following that for consequences for the Saudis. There were lawmakers on both sides of the aisle calling for reduced weapon shipments to Saudis. Some were calling to redirect Patriot missile batteries that we supply to the Saudis to Ukraine. And that's pretty important because, the petrodollar system, the system established by Nixon and Kissinger back in the 70s with the Saudis, where they price all of their oil in US dollars. The other component of that is that we provide advanced weapons for them and we arm them. We give them a security guarantee backed by the US. And another development that we witnessed just this past week was that Saudi Arabia has now joined the SCO, or the Shanghai Cooperation Organization. And this is sort of a political union. One of the elements of it is that it is a security and defense organization. Now, the Saudis have been admitted as a dialogue partner. That is the first step towards full membership. So we are seeing a huge pivot here away from the US as a strategic partner towards China. There's also an economic component of this. If we look at the chart of U.S. imports of oil from OPEC and Persian Gulf countries, you can see it is near a record low, whereas China has become Saudi Arabia's biggest trading partner, and they are the biggest importer of Saudi crude oil. So, it doesn't take a genius to see what's going on here. The Saudis are diversifying their economy. They are diversifying their alliances around the world, and they've not made it a secret that they're interested in joining the BRICS nations. So the end of the petrodollar is approaching rapidly, it would seem. And that was confirmed by the purchase last week of 65,000 tons of UAE natural gas by China. They imported that. They paid Total Energies, a French energy company, for this natural gas. And the big part about this story is that they didn't pay in US dollars, they paid in Chinese yuan. So we are seeing the establishment of a petroyuan to supplant the petrodollar system. And that means a lot of those dollars, which up until now have been used by countries to buy petroleum and gas, they're going to be coming back to the US, and this is going to have a huge impact on inflation. Now let's talk a little bit more about China, because it's not just in the Middle East that they are exerting their influence and undermining the petrodollar system and US dollar hegemony. Also last week, China and Brazil announced a major agreement to de-dollarize their bilateral trade. They will be conducting that either in yuan or the Brazilian real. So they'll be using their local currencies for bilateral trade. And this is a pretty big deal because Brazil is the biggest economy in Latin America, and China is their biggest trading partner. They conducted last year about $150 billion in bilateral trade. So now that will all be conducted in yuan or reals. The dollar is going to be out of the picture. And it is not just imports and exports, it's specifically targeting the energy sector. We also witnessed China putting in $1.9 billion in an investment into Petrobras, that's the Brazilian energy company. This investment will be towards developing the Búzios oil field in Brazil. So China is making inroads around the world among these BRICS members to create a petroyuan where the energy trade is conducted in their currency. And it isn't just China. There are more nations around the world who are dumping the dollar. We've got the Association of Southeast Asian Nations meeting last week, a meeting of their finance ministers and central bank governors, where they discussed dropping all the G7 currencies, the dollar, the euro, the yen, in favor of their local currencies, once again, for bilateral trade among member nations. And, this kind of makes sense from their standpoint. We'll get into the reasons the world is de-dollarizing, but it just makes sense. If you're trading between Thailand and Singapore, why do dollars have to come into the equation at all, right? Why can't they just use their local currencies? And that's exactly what they are considering doing. We also had calls out of Moscow recently for a new currency to supplant the dollar for bilateral trade among the BRICS nations. Now, we heard about this first earlier this year from Sergei Lavrov, the Russian foreign minister, who told us that a BRICS currency will be at the top of the agenda at the BRICS conference this August in South Africa. Well, now we have Russian lawmaker Alexander Babkov saying the following. This is a quote. New Delhi, Beijing, and Moscow are the nations that now institute a multipolar world that is endorsed by the majority of governments. Its composition should be based on inducting new monetary ties established on a strategy that does not defend the US dollar or euro, but rather forms a new currency competent of benefiting our shared objectives. So it is seeming more and more likely that the BRICS nations will be formulating some form of alternative currency for trade amongst the BRICS nations group. And this is a big deal because, BRICS, they contain a huge portion of the world's population. Another thing that will be on the agenda in the August meeting will be expansion of BRICS. So expect it to encompass even further nations. You've got Iran, Saudi Arabia, joining. Mexico, I believe, has espoused an interest in joining the BRICS. And, keep in mind that if Mexico wants to join BRICS, we've begun hearing from U.S. lawmakers about the possibility of deploying U.S. troops to Mexico to help deal with the drug cartels. This has nothing to do with drug cartels. You got to understand that. This has a lot more to do with Mexico's desire to perhaps de-dollarize, but join the BRICS nations. That's when they start talking about that, that's when we start hearing about U.S. troops being deployed. So, if the politicians in Washington wanted to attack the cartels, it'd be very easy for them to do that without any military intervention. They could just, end drug prohibition, and that would probably be a much bigger blow to cartels. But they like the cartels down there because it gives them an excuse to use military force, whenever they need to. They've kind of got that in their pocket. Now, another story that got a lot of attention this past week was, now I may be butchering this guy's name, but Balaji Srinivasan. He is a former Coinbase executive. I think he was one of the founders. But on March 17th, so a couple weeks ago now, he made this public bet on Twitter that the price of Bitcoin would exceed $1 million within the next 90 days. And he is betting on a U.S. hyperinflation within 90 days. Now, I don't know if he actually believes that this will happen. Perhaps this is more for publicity. Now, if you follow this channel for a while, I'm not particularly bullish on the US dollar in the long term, but 90 days hyperinflation seems like a bit of an extreme call. But who knows? It certainly is within the realm of possibilities, and that's kind of a scary thing. So that has been getting a lot of attention as well. And also this clip of Kenyan President William Buto. I'll just play the clip for you real quick.
For the people who work numbers, I am giving you free advice that those of you who are holding dollars, you surely might go into losses. You better do what you must do, because this market is going to be different in a couple of weeks.
So he has that ominous warning for holders of the dollars that the situation is going to be changing within a few weeks. Again, I'm not so sure that is the timetable on which we are going to see the loss of the world reserve status by the US dollar. It seems like, one of the things that we consistently do in the alternative media and the stacking community is we may be a little premature on our calls for things. So I think that probably 90 days or the next couple weeks is a bit short, a bit of a tight schedule for the dollar to collapse. But again, it is possible, with everything that's going on in the world, all of the de-dollarization news, all it would take is one black swan event and we could see this happen. Now, on that note, let's talk about why all of these countries are de-dollarizing, why this trend seems to be accelerating. Now, part of it absolutely is the weaponization of the dollar, the freezing of Russian dollar-denominated assets, the threat of sanctions by the U.S. It's a very heavy-handed approach, and it is discouraging countries from relying on the U.S. dollar because, who knows, the political tide could shift, and they might find themselves in the U.S. sanctions crosshair next. So all of a sudden, those dollars can become a huge liability. But also, we have got the insolvency of the Western financial system. There's a headline from Fortune. Banks are sitting on $1.7 trillion in unrealized losses. Now, for the time being, I suppose that's fine. It seems like markets have more or less been assuaged about this banking crisis, but you got to realize this crisis hasn't gone anywhere. This is all fine until depositors try to withdraw money, just like what happened at SVB. And one thing we saw from SVB is that can happen very rapidly with social media and the speed with which information is shared. A bank run can happen like that. These banks, $1.7 trillion in unrealized losses is a tremendous amount of loss. And if we do see bank runs on these banks and they have to realize this losses, they will fail, or more likely they'll be bailed out. I mean, that's what we saw with SVB and with Signature Bank. The FDIC and the Fed joining hands here, joining powers to bail out these failed banks and try to instill confidence. We've got the BTFP, the Bank Term Funding Program, which is backstopped by a measly $25 billion. So, this is not going to be sufficient to take care of the $1.7 trillion in unrealized losses. More likely, what we will see is perhaps the banks might put these bad assets with these losses up as collateral for loans through the BTFP, or perhaps a souped up BTFP that we might get in the future. And we'll see the Fed take these assets onto their balance sheet, probably never to leave the balance sheet. And if we take a look at the balance sheet, we can see it has gone up quite a bit since the announcement of the BTFP. I made a forecast a couple videos ago that we would see $10 trillion on the Fed's balance sheet far before we ever see 8. The quantitative tightening, the drawdown of the balance sheet seems to be over now, and I am sticking to that forecast. And if we see this $1.7 trillion in losses rear its head and the Fed is forced to monetize these losses and take it onto its own balance sheet, we will absolutely see the balance sheet exceed $10 trillion. And this will be enormously inflationary. I mean, that's the real takeaway here, is that this is basically QE by another name. This is taking assets, worth $1.7 trillion less than what the Fed will be putting out there in terms of cash. So that is tremendously inflationary. And I do think that we are going to just see more and more de-dollarization news. The shift towards a multipolar financial order is absolutely accelerating. And it's because of the weaponization, it's because of the geopolitical situation that we find ourselves in, and it's also because of the insolvency of the Western financial system. So people, institutions, governments around the world, they're becoming a lot more wary of holding dollars. This is also why we're seeing banks accumulating gold at the fastest pace on record. That is a trend that continues as well, and it's because they understand that the dollar's days are numbered and that gold and precious metals are the real safe havens, specifically physical ones. I mean, the dollar collapses, you don't want to be holding SLV or a futures contract because there simply isn't enough physical to back up those instruments. You want to get your hands on physical metal before this event occurs. I mean, I know the price of precious metals has gone up recently. It can be difficult to stack when you could have bought it, 20% cheaper a couple months ago, but that's just the situation we find ourselves in. I'm going to continue stacking. It's not financial advice. I'm not telling you what to do. Everybody's situation really is different. But as for me, I am taking a cue from the central banks around the world and getting into physical assets. And, as this situation plays out, expect more assurances from the powers that be, from the Fed, from the administration, from the Treasury. I mean, they're never going to acknowledge that a crisis is brewing until it is too late. And don't ever expect them to take responsibility for this either. I mean, there's always going to be some kind of scapegoats. It's always going to be somebody else's fault. But all we can really do is do our best to get prepared. So that is what I'm doing. I hope that's what all of you are doing. Let me know what you think in the comments down below. Everybody, thank you very much for watching, and I will catch you next time. Smart Silver Stacker out.